Good afternoon and welcome everyone to the Ultimate Trading Webinar for Beginners. My name is Danny and I will give you the webinar today. So to open the webinar with the introduction, as we said, we will use a nice notepad for the notes in the sheets, and we will maybe make it smaller a bit like this. Okay, and we go back into the default screen like that. Excellent. All right, so as many of you know, AvaTrade, we are a regulated company with 9 licenses worldwide. We exist since 2006. If you got any questions or queries along your journey, you can access the customer service here at the bottom left. You can chat with us live or use the WhatsApp, whatever function you prefer. And if you're using a different interface, you can just contact us directly through customer service at avatrade.com. Now, on top of that, for the trading methods, everything under the trading umbrella, in fact, in terms of strategy, in terms of risk money management, all kind of things that you can imagine, we can also assign a senior account manager to give you assistance with the trading side. So customer service will give you assistance with the customer service, and the senior account manager should be able to wrap all the subjects under trading. So if you don't have a senior account manager yet, you can contact the customer service and ask for assignment. All right, like I said, we will proceed with the web trader. I might as well jot that down, web trader. And it's also important to know we are using the desktop version, meaning that if you want, there is an app called the AvaTrade's trading app, which is on the phone. It also has similar features to what I'm going to show you now. Maybe it looks a bit different. The interface looks a bit different since this is a phone and this is a computer, but you can still enjoy the features that I'm going to show you now. And of course, we have the traditional platforms, MetaTrader 4, MetaTrader 5. Okay, AVA futures and AVA options. And something that I'm going to explain a little bit about will be AVA Social. Since this is a webinar for beginners, not beginners only, but okay, so AVA Social, what it does is it allows you to have, it looks very similar. Just a second, I'm going to show you. You have an ability to choose to follow or copy another trader in the app. It's called AVA Social and it's free to download. And what you can do is you can follow or copy another trader. How does that work? Let's suppose that we are trader A and we would like to follow trader B. Since we saw the performance in the app and we think he's using a good strategy, and we decided to follow. All right. So what does that mean, to follow? That means that whatever trader B is gonna take, whatever position the trader B will open, I will get a notification with this position, allowing me to do it similarly. Basically, it allows me to observe a strategy without using a strategy. I receive the message, I can choose to open a position or not. I can, of course, modify and adjust it to fit to my strategy, if I already have strategy. Now, that doesn't mean that the positions will open automatically. It means that we're getting notifications, such as you can maybe similar to signals, and we can open the position the same way. All right, what does that mean to copy? If we're copying what trader B does, this will actively launch the positions similarly to trader B. So whatever trader B has traded, whatever position the trader B has traded, will happen on my account as well. Okay, we're copying, actively opening a position automatically. It doesn't require me to open a position. Of course, I can, one very good advantage using the app is that it gives you the ability to adjust the lot size. So still the positions will open automatically. Okay, since I'm copying the strategy, my account will be linked to his. Okay, but I can choose to use a different lot size, which come extremely handy since I'm not always going to copy a trader with the same balance as mine. And not always my account will be able to withstand the same margin requirements. Okay, so what does that mean? it means that I can determine to maybe go with a smaller lot size that allows me to assess first if this is something I can handle or not. All right. Now, if you want automatic trading, as we said, this is copy. Okay, if you want to learn to follow a bad strategy and you want to open the positions on your own, so that's follow. And this, like I said, can be very useful since as a beginner, I'm not always sure what strategy I'm going to use and how. All right, so I recommend all of you to download the app. It's fabulous. All right, apart from that, we're going to carry on with the web trader as we said. Usually when we are logged into the website and we clicked on the trading under the trading platforms in the personal area and we click on the web trader, this is what we are supposed to see. Sometimes it may look like this. Okay, you can see that you can toggle down and up by the two arrows here, and then it expands the screen. What we're going to do is we're going to look at the menus to the left, beginning from the top, going down. In here, we can find the personal area, my personal area, and the information about my accounts. In here is trade. This is the default screen. As I said, this is what you're going to see when you're logged in. If you're anywhere on the website, it doesn't matter where, even here, and you wish to go quickly back to the default screen, what you can do is you can click here on the icon, or you can click here on the icon, but it will quickly take you back. Underneath, if we go down, we have positions, orders, history. We don't have any history at the moment since this is a demo and we haven't took any positions. We also have the signals, which can be also very useful. The way that it's constructed is we have here some categories if we would like to specifically select an instrument from a certain categories. In here, the way that the signal section is constructed is with the symbol, type, stop loss entry, take profit, and the signal produced time. What does that mean? Let's begin from here, then go to there. That means that the signal, this is how it looks like. I will explain to you in a moment how it's constructed. Okay, and the analysis that was done here has a certain date that it was produced. Okay, and if we look at the list, we notice that this is the newest one that was just created. And if we go down, we see that it gets older as we scroll down. Now, for people with a bit of experience, this would make a lot of sense. Since the market is moving and this signal was produced on a certain scenario, it might already, I'm gonna show it to you in a moment, but it might already happen. So there is an advantage, there is a certain advantage taking a signal that was just made to a signal that was made a few hours ago. Okay, we'll speak about it later on. Now, if we take as an example, this is, let's take maybe Brent oil as an example, and we see that the type is buy. What does that mean? It means that to the price, the entry price, that upon that price, this analysis was made, the something called take profit, I'm going to show it to you in a moment on the chart, and something called stop loss. Okay, let's first click on view signal to see what this signal is. We'll also expand the chart to better see the chart compared to what we see here. And we see that there are something called resistance and something called support. Okay, we're not going to do any complicated analysis now, but just in a nutshell to understand what we're seeing here. Okay, basically resistance will be higher points above the price. Okay, certain pick points that there is a very nice way to identify those points. Okay, and with those points, okay, which can be different from the chart, but I'm just explaining, I'm not doing any analysis here. Now we can see that those points above the chart with at a certain level will be my resistance, okay, and certain levels below the current price will be the support. Okay, great. That means that in a buy scenario, when I want my value to increase. When I buy to make profits, I need the value to increase. Currently, is an example, buying at 65, I want the value to increase above. The higher it gets, the more profits I'll make. What happens if it goes down? Then I lose. Okay, the farther it goes, the more I will lose. Meaning, now I look at the resistance, okay, it marked in green. This is a buy type. We want the value to increase. This is why the take profit, we'll look at it in a moment. Let's click on buy to better understand what's happening here. And we can see that there is take profit marked for us at the higher level, okay, and stop loss marked at the lower level. Okay. Now, what is take profit and stop loss? Take profit actually stops the position automatically with the profit, and stop loss stops the position automatically with a loss. So basically, what happens when I'm using a signal? The signal has already instructions embedded in the signal automatically, and by clicking here on view signal and then choosing the scenario, I'm already equipped with take profit and stop loss. That was done upon the analysis that we saw. That was done based on that. Okay, so briefly, take profit stops the position. In a buy, it needs to be in a higher place. And stop loss stops the position with a loss. It needs to be in a lower value. What if it would be the other way around? Okay, in a sell, we want the value to decrease. Therefore, to make profit, to take profit, we need to have it in a lower value, and the stop loss will be higher, which is vice versa than the buy scenario. Now, if for instance, we're going to take another signal, just to, again, to explain, maybe we'll take one of the cells, maybe NASDAQ. Okay, and we'll look in here. All right, so we have the support. What is the support? We said levels lower than the price, right? Levels lower than the price, and resistance levels higher than the price. Excellent. Now, this time we're going to go with a sell, and we will see that if we click here on sell, this time the take profit will be in a lower value, right? Current value is 18,700. For a sell, it's 698. Okay, and the stop loss will be up, which is, again, as we've explained, the opposite from the buy scenario. Why am I explaining you this? So whenever you open the signal and you see the analysis, you'll make a wise choice. Okay, always remember, if you are buying, you want the value to increase, but if you are selling, you want the value to decrease. Decrease means we're making profits. Increase means we're having losses. Okay, they are opposites, buy and sell. All right, that's basically how it works. There is nothing complicated to it. We just select, do the analysis, make whatever choice we make, and maybe now we'll try the buy. And we see that, okay, this might not be the favorable scenario that I want. Okay, so maybe it would make more sense to me to go with a sell. Okay, always make this comparison. It doesn't take a lot of time. And basically this can be very helpful. Unfortunately, if you see, okay, we'll take the pound USD as an example. If you see that you don't have that stop loss and the take profit values, which is displayed with most of the signal, but as you can see, this is an example that the signal is not equipped with that. That means that the scenario has already happened. And this is precisely what I spoke about 5 minutes when I spoke about the signal production time. Okay, since the market is moving and since the price is changing actively, the scenario that was analyzed in here has already happened, which doesn't allow us to use the signals analysis. I'm going to show you in a moment what will happen if we try. And it also displayed in here, the market has already reached a key level, meaning that the analysis has already done. Okay, the scenarios, one of the scenarios. So if we try still to use, that is not going to let us have the pending orders. Okay, it's important to know that take profit and stop loss are automatic orders and they are triggered reaching the price. Does exactly what it's written in here. Close the position with the profit, close the position with a loss automatically. Great, great. Let's proceed. Are there any questions about the signal section at this point? There is a question from Matt. When we'll have again signal for pound USD? This is an excellent question. Unfortunately, there is no way to know. What Matt, if I understood what you're asking, is when there will be a signal for a pound USD, there is no way to know. There is no way to know. What you can do is you can come back to that list again and you can refresh. Another nice way to see if the instrument you're trading has a signal or not is just to type it here and go like this. And if you click, okay, it's showing us that it has a signal, but okay, you need to refresh. You just need to refresh. Unfortunately, there is no way to know when there will be a signal again. We just have to wait. It's also important to know that the signals are not manufactured by AviTrade. They are manufactured by the Trading Central, okay, as it's written in here. All right, and you can explore it much more. It can be very helpful. All right, now if we'll carry on down, we have the news section. What we saw, by the way, was technical analysis. Technical analysis, averages, support and resistance, and so on. This now, what we're looking at is fundamental analysis, and that means that we can educate ourselves through those articles and to see what is happening behind the scenes. And we can also see that at the bottom of this article, if we'll scroll down like this, we see 4 related instruments. If we'll click on that, we'll see what this article refers to. And we'll see that what can have an impact is actually oil, gold, Bitcoin, and pound. Very nice. Also have categories in here. Following down, we have here the Globy icon, which also can be very helpful. We have analysis views, market buzz, forex features, ideas, economic calendar, and trading calculator. We'll focus on the market buzz for now. And we can see that in market buzz, how do you get access to signals? John, thank you for the lovely question. I just show that you can access it through here. You can access it through the signal section. And one more thing I wanted to say, because this is something we added recently. If you are on you're using your phone and you would like to have notifications, you need to enable the notification to receive notifications on your phone in the signal section on the app. Okay, you need to go in the app, go to the signal section, and there you have a toggle to allow to receive notifications, okay, on your phone. Yeah, and in the market buzzes, we can see there are different sort bubbles here, which we can see that the bigger the bubble is, the more mentions that it has, right? So Apple has 592, NVIDIA has 875. Maybe we'll click on NVIDIA for now. And we can see that it's also separated to different subjects. So I don't have to read about everything and waste my time. I mean, I can if I want to, and for fun, why not? But let's suppose that I want to be specific and utilize my time. So we can see that it's divided here, and I can focus on what I want. So if I want to go with CAPEX as an example, we can see at the moment there are no active articles. That's fine. We'll go with price target raised, and we see articles related to price target raised. We can specifically read the articles and go do the analysis. We can also see different parameters in here, how much the stock has increased. We have here price may rise and a lot of other useful things. We can go back and select another one, and we can change the layout to the traditional one. I prefer it this way, but you can do whatever you want. And the last thing that I'm going to show you before we carry on to the next bit is the economy calendar. This was also fundamental analysis. I forgot to mention that, and that's important. It's important because one of the things that I always say the most is we need to combine two types of analysis: technical analysis and fundamental analysis, and not just one. Looking only at the news, then not reading the candles is not really useful, and technical analysis without knowing what's happening with the news also very open for surprise. So what I want to do is I always want to know the how, right, to do proper technical analysis, and the why, which is naturally the reason of why the market is moving. The market is going crazy. Why? Because Trump has this war with the tariffs with China. Again, just giving you an example here. The how is if I'll go to the chart, do the analysis, apply the indicators, and understand the tendency and the volume and the averages. All right, they both need to dance together. All right, now if we carry on with the with the economic calendar, the reason that it's grayed out is because we need to select today first. And it's still grayed out because it seems like it's a mixture of all the various countries, all the various currencies. What if we don't want to see all these various currencies, but we're mainly focusing on the pound, and on the Aussie as an example, and the dollar. All right. And we can see that what's displayed on this list is only the currencies that I've selected and nothing else. We can also see there is a red line here separated the grade events here to the white events here, which is it's a little brighter than that, right? And we can see that this column here is empty. Why? Because, okay, let's first understand how it's constructed. So we have previous, which is the previous result, forecast, what we expect that will happen in actual, what actually happened. And we have the impact, we have importance. So why this column here is empty? Because those events, if you'll see, hasn't happened yet. So obviously we don't see the result. If we look at the previous, we've got the previous. Sometimes we have forecast, certain events doesn't have it, and the result will only be displayed after the event has took place. Besides that, we can also filter the impact. If we don't want to see all those small events, we want to focus on the high impact only, the importance, what makes the market fluctuative, Mr. Powell, and the rest of the important things here, the inflation rate. And we can see, just a second. And we can see that it's only displaying the pound and the dollar and the high impact event only. Besides that, the only thing that I'm going to show you is a very nice feature in the calendar, which is the last bottom to the left. We have the impact, volatility, price chart, event chart, and then finally add to calendar. Just remarkable to my opinion, and the reason is this allows me to book the event onto my calendar and then specifically receive the message, do the analysis, go to the chart, and do what I want to do, rather than to try and remember when it will be and to plan it to my day. I can just put it in my calendar and right away I can do the analysis. All right, let's carry on with the second part. And on the second part, we will have, like I said, this will be the practical part, and maybe we'll look at gold again, because gold is quite interesting in the past few days. Okay, and to begin with, we'll delete everything that is irrelevant in here and type gold, and underneath we'll also set a certain target, since I'm not going to trade blindly and then just dynamically decide, because I want to have a certain number in mind that will indicate when I can close the position. If I don't have it, as an example, and I click here buy, right? We've already learned, regardless of the price that it will get to, that as long as gold will carry on up, I will keep making profits, right? So this will be the profit area. This is for a buy scenario. Remember guys, in a buy, we want the value to increase, and a sell, it's vice versa. So as long as gold will go for us higher than the current price, we should make more and more profits. But what will indicate me at what price to close and how much will I make, right? I need some indication to when I'm going to close the position, since I'm trading CFDs. We're not going to hold the position forever. Okay, we want at some point to close it, actualize the profits, and carry on. Now, setting a certain number allows me to capture, okay, if I'll take the buy now, then I'll go to my positions, and in my positions, I see that gold is making such, let's set the target now, let's say $1,000. Then what I can do is I can click on the X and close the position. Obviously, we're not going to open a position now with gold and make and wait until it will have 1,000, but this is a very helpful way for me to know when I can close the position, and I'll be satisfied. Okay, before we carry on, I would like to explore the toolbar a little bit to place some things on the line that will help us assess a bit better the situation here. This is actually a search bar. If I'll delete whatever is here and I'll put another instrument, I can choose it from the list and immediately have another instrument. And if I carry on to the right, we already saw that from the signal section. If I'll click here and we'll scroll down, we see we have minutes, hours, days, weeks, and months. At the moment, when 1D is selected, each day here will represent a day. Okay, 16th, 15th, 14th, Sunday, weekend. Yeah, this blunt candle here represents the weekend. If I carry on to the right, this one I skipped. Let me just quickly show you the difference. This is with the line, this is with the candles. As I always say, using the line might be nice, but at the end of the day, it gives you different depths than using the candlesticks. You can see that the rectangle that I've marked on the chart are around those thin tails coming from the candles. And when I switch to the line, they're not there anymore. Okay, they're not there for us to analyze, okay? That's the difference. Now, if we carry on to the right, we can enable from no crosshair to crosshair as we selected. Now we can get data from the candles. In here, we've got different layouts. We can have multiple charts. Okay, in here to the right, we have indicators. We can click and drag and then click save. We can obviously modify that before we doing so. To the right, we have all the nice things that I've placed on the chart, which can be helpful when doing your analysis. And the beauty using this interface is that it also remembers what you've placed. And then if you come and visit it again, even if you close the chart, still, just a second, still you will be able to enjoy the analysis that there are lots of numbers here. I might as well just do that. And just a second. This will just make it a little bit easier for us to see what's going on here. Oh, there we go. Okay, this one will just make it a little higher. Yeah, that's fair. That's fair. All right, and we can another thing that we can do is we can click here on the column price and we can click and drag to be able to customize the chart better to our needs. And we can also scroll anywhere on the chart. We can scroll on our mouse to see the difference and fix the number displayed on the chart. It was like this. It's very not really and if we scroll in, it fixes the alignment. And one more thing that we will do is, before I'll change the lot size, I just want to show you that there is another tab in here that is called Instrument Details. We'll click on Instrument Details just to see that there are certain data here that can be helpful for us moving onwards. There are the times that gold is opened. There are also the margin requirement, the swap, okay, all kind of things, the lot size. One of the things that I do, and before I open a position, is first reduce the lot size to 0.01 because it allows me to simulate and then better increase to the lot size I'm looking for. For instance, at the moment, if we will enable both take profit and stop loss, and what's that? Execute when price hits, another pending order. What does that mean? It means that this allows me to automate my entry this time. Now I can choose if, for instance, I don't feel confident to buy now, okay, 3,304. What I want to do is actually I want gold to bounce back again to the 31.95 mark, and then to buy there, maybe a little higher. We'll go with 3,200 seems fine. Maybe we'll mark it in white. And yeah, this will be our entry. So what this does is it automates your entry. Take profit, automatically close the position with the profit. Stop loss, automatically stop the position with the loss. And execute when price hits, actually open automatically the position. I will explain, Martin. I promise you I'll explain about the lot size in exactly a moment. Now, if we look at the support and resistance, well, gold is in his fourth all-time high just in the past few weeks. So there is no support and resistance to aim for. There's no resistance, all-time highs in your record. Okay, so there is nothing higher than that, right? Even if we go months and months back. So what we can do is we can use an indicator that allows us to assess the approximate average. And thanks to that, we can see if the stop loss and the take profit are realistic. Meaning, For instance, if I think that this price, let's say 3,300, seems to me like a good price to close the position with the profit. So I would like to know if the length between the current price to the price that I wanted to enter is realistic in the time frame that I'm hoping to trade. I know it sounds complicated. Let me break it down for you. Okay, let's maybe narrow that down like that. Okay, and yeah, we'll quickly recap what's happening here since we're starting to run. At the moment, we can see that this lightning that I've marked, maybe a broken lightning, but whatever, you can see it was bullish for 3 days. Again, we're looking at days. So it was bullish for 3 days, increased by almost 9%. Then it declined, opened a new week with a bear to 1.6 down, 1.6% down, and it fully recovered even yesterday, not today. This is Tuesday, Monday, and Sunday. So we can see that it fully recovered already the downtrend that it has. Now, what I want to do is I want to buy again if it will decline, because I saw what happened previously. Okay, and what I want to do is I don't want to buy it right now because I still think it has potential to decline, okay, in case something fundamental will happen. So I keep myself to right to buy it at a lower price, hoping that it will bounce back to that after recovery. There is also something called consolidation, which we can identify through the structure we see, but we're not getting into that. Now we will just focus on opening a position at 3,200 and potentially closing it at the price that it's at right now. We'll even mark it in green, so it will be easier to understand. Green line means we want to close the position where we want to close it in the profit, and red line will be where we want to close it with a loss. Okay, now to simplify that, we want to know that the levels 3,300 and 31 is realistic and match to the plan that we're making. Okay, what does that mean? It means I don't want to target a price that it's too far, because the take profit and stop loss are destined to trigger. Not this one. This one we don't want it to trigger. But we place the take profit realistically to a price we hoping it will get to. For instance, if I be ambitious and tell you guys my take profit, I want it to be at the 3,500 in here. Yeah, this is where this will be the secondary line as an ambitious line. Or maybe an olive green, whatever you, okay. Now, of course, the colors that I'm using is just my, you can use what I'm showing you now in your own colors and in your own way. All right, we can see that there are two lines, one for take profit primarily based on the current price, just to buy after it bounced down, bounce back up, and hopefully close it. And this is a very ambitious line. We'll compare them both with an indicator called ATR to see approximately the average we can expect. In what other way we can estimate how much gold can move per day, since we're looking at days, is we can manually subtract the open from the close displayed in here and the high from the lows to know the differences of what happened yesterday with gold. Unfortunately, this is a very time-consuming procedure, very old and primitive procedure, which sometimes I like to do, but now we're in a webinar and we're trying to save time. So by typing down AVE, we actually can find average true range, click and drag it to the right. Now we can simply choose the length of how many candles we wanted to analyze, and it's going to automatically give us an average. Meaning, since we're looking at days and the length here is 14. Now it's counting 14 days. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 1, 2, 3, 4. Yeah, so 14 candles. What if we only want to have the last week as reference, because the segment can change and we can see that the candles here are considerably bigger than the previous candles. So we don't want it to go so far back. What we want is 1, 2, 3, 4, 5, 6, 7, 8, 9. Maybe 9 is enough, or maybe 10. No, 9 is enough. Maybe 8 is even better. Okay, and then we'll make it a different color, and we can see that gold is actually moving $54 per day on average. So the target that we have, the 3,300 from 3,200, which is $100 away. Okay, so how many days, according to our average, it can take? This can be changed. This can be changed according to the plan and to the analysis. So now let's make it 2 days. Let's even go for a week. Okay, we're analyzing days, but we can see that it's not moving $100 per day. Yeah, we can all. I hope that everybody can see that, guys. This 54 is a reference of what happened with gold in the past 9 days. Based on this indicator, based on the past 8 days, sorry. This is the reference. So will it be realistic for me to make it to happen in a day? What do you think, guys? Let's point out ATR equals 54. Okay. Okay, and now we have the entry. Entry, we said automated to be 3,200. Okay, take profit is now destined to be, okay, we've changed it to the, 3,300. Yeah, we'll adjust it like this. Excellent. And this can be $100 down. Excellent. And now we can see that there is $100 difference when we're looking at an average of 50. So you tell me, guys, do you think that it's realistic, is in the range or out of the range? What we're looking for is 32,000 to be 3,300. Okay, $100 away. Okay, when the average is 54. So I'm asking you guys, do you think that it's in my range or out of my range? This 3,300 that I targeted is in the range or out of the range? What do you think? Exactly, Camilla, it's out of the range. Why is it out of the range? Because the range is 54. The average true range is 54. And what we're looking at, what we're looking for is $100 away. Therefore, it would be more realistic for me that this $100 will be achieved in several days and not in 1 day. I'll tell you even more than that. This 54 can be simplified to different directions. And it's not guaranteed that it will go straight up, 50 and 50. It can go 50 and then to bounce back, 20, 30, and then to bounce back again. Don't forget what happened here. We can see that even if the general trend is bullish and the long-term movement we can identify as bullish, sometimes there are fluctuations down. All right, so instead of 1 day, we'll make it 1 week. Of course, if it's moving 50 per day, I think to move 100 in 5 days makes a lot of sense. And we'll write it down. So in here and in here, this will be our take profit and stop loss potential results. What does that mean? It means that now we can see how much we can gain or lose. That means that the more we will increase the quantity that we're taking, at the moment it's 1. So with $100 difference is giving us $100 with 1. If this would have been 2, so this would have been 200. If this would have been 5, this would have been 500. Yeah? So from that we understand the quantity that we have times the price difference is giving us the result. Of course, this is not something you have to remember if you're using the web trader, but if you're using a different interface like MetaTrader 5 or MetaTrader 4, you probably want to know that. Okay, another way for us to find how many units we need is just to divide our target by the movements, which was withdrawn from the ATR, and then it will give us the units. Okay, there are many other ways to check the average, but this is a nice way that I'm using now. We can take the target, which is 1,000, divided by the movement, but the movement is not 54. The movement is 100. 54 is just the reference per day. Actual expected movement equals 100. This is where we targeted our take profit and take profit and stop loss. Now, if we take this 100 and we divide 1,000 by 100, we see that we need 10. That means if we'll, instead of 5, have 10 in here, and we again scroll down, we can precisely make 1,000. How so? Because it's $100 away, and we have 10 units, so 10 units times $100 away is giving us 1,000. All right, great. So far, guys, are there any questions? Is there anything that is not fully understood till this point? To explain? Yes, to explain about the lot size. You are right. You are right. I should now explain about the lot size, okay, and how it works. So the lot size is basically a measuring unit. It's a measuring unit, and in every instrument there is a different lot size. So for gold, it may be, and I can easily check it just by typing here 1. If I type 1, we can see we have 100 units. If this would have been another instrument, any other instrument, we have here gold again, we'll choose crude oil just as an example. Now, if we click on crude oil and we place here 1, we see that for oil, the lot size is 1,000. What does that mean? It means that if I do 1 lot with oil, it will represent 1,000 units. With this in mind, every dollar that the market will go for me or against me, I should make 1,000 or lose 1,000. Okay, so just giving you a simple equation here, a simple example here. Okay, as you can see, we targeted 63. We can make 1,000, and we targeted 61 as stop loss. We can lose 1,000. Okay, so the lot size changes and varies between different instruments. If we take Nasdaq is also 100, this is also 100. Okay, but you get the point. You get the point. The leverage is different, okay, and it changes from different instruments. For now, let's stick with what we had according to our equation, and let's bring back the numbers that we had. This was 3,300, this was 3,200, and this was 3,100. Okay, great. Now, if we see the comparison that we have, making 1,000 or losing 1,000, this is not really a ratio that I might be happy with. Why? Because if I'll take another 5 positions like this, and God forbid they don't go well, what can happen is I can either make Okay, I can either make 1,000, sorry, make that 5,000 or lose 5,000. And I'm not really happy with this kind of ratio. What if I would like to adjust this 1,000, which is 10% of my balance, to be 250? Okay, I'll teach you guys a quick calculation how to know the percentage of your balance. If we'll compare 1,000, we divide it by 10,000. That means 0.1, right? Times 100 equals 10. Okay, now if we look at the equation, we can go potential loss, which is 250, what we want to have, divided by the balance. That gives us the factor, and then factor times 100, giving us the percentage. I know it looks complicated. I'll explain in a moment. Okay, and how does that work? We'll take the potential loss, which is displayed in here. In a moment, we'll learn how to make it to 50. And we'll divide it by the balance, which is 10,000 is displayed in here. And this gives us 0.025. Let's do it with a calculator together. Okay, and as you can see, and now if we'll multiply that by 100, this will represent the percentage of our balance, which is 2.5%. So now we should have 10% potential growth to 2.5. And how we can do it? Well, one of the things is to reduce the lot size. If we do that, so this will also affect our profit, and we want to maintain the profit. How can we do this? Well, if we get the stop loss closer into the entry, this way we can reduce the possible loss. So if instead of $100 away, it will be $50 away, let's try that. Okay, it will be 500. But what if we minimize it even more? Then we get the 250, and we can compare 1,000 with 250, which is 10% to 2.5. And now, if I look at the same ratio for 5 positions, what we can look at is potentially making 5,000, that stays the same, and potentially losing 1,250. How so? Because if I keep the same ratio and I multiply that by 5, this is what we get. All right, great. So we covered everything that we should have had. Well, let's quickly recap what we did today, and then it will be easier to connect. Like I said, even if you haven't understand what I've explained now, you can still go to YouTube channel and see the webinar again and recap whatever part you want again to recap, okay? So if we recap quickly now, the first thing we did is just roughly estimated support and resistance. As I have explained, gold currently doesn't have any new resistance since this is an all-time high and it's irrelevant. What we looked at is the levels that we have now, and we saw that it's when it got to 3,200, it bounced up. So with this scenario, I think it might happen again, and I targeted the buy to be at 3,200. And then assuming it will jump back to the same level, I've targeted that to be my take profit. I took this 100 as reference, and I placed my stop loss according to the same direction. Okay, this was the initial place of our stop loss. And then to verify that, we've added the ATR to tell us what is the average per day. Okay, so yeah, it's $100 away, not necessarily we'll get there on average in a day, but maybe in a couple of days. 100, if I look at a week as reference and not a day, I'm sure will be more than 100. You see, switched to weekly candles, we can see it's more than 100, which means that it's in the range. Okay, I didn't want to do it to waste time, so I kept it as it is, and I jotted down to be 50 as the ATR. Actual movement is 100. Then we saw that to make 1,000 with 100 units, we need to make 1,000 with $100 difference, we need 10 units, thanks to this equation. And lastly, we estimated the ratio of what can happen. And we saw that 1,000 and 1,000 is not the ratio we were looking for, since we're hoping always to make more profits than losses. And after we adjusted the ratio, we're looking at a nice ratio of 1 to 4, hoping to either make 1,000 or potentially losing 250. All right. So this is what we had today. Unfortunately, our time is up. I hope that you guys learned at least one thing from this webinar that can be helpful. And I wish you all best of luck with trading. You're welcome to join us tomorrow with a live Q&A. Until then, have an excellent, profitable day.